Does it feel like homes have shot up in value in the last just couple of years, and cars have shot up in value, and food and everything else? It's been astronomical in terms of how quickly these things have risen in price. Well, did your income shoot up in value in the equivalent amount? Probably not. For most Americans, it didn't. For most of us, it didn't. Things got more expensive. Our incomes didn't go up. What can we do about it? Well, that's what I discuss every day of the week, and particularly on Fridays, we get into assets. So we can discuss what you can do about it to keep you from getting poor on a daily basis due to the fact that things are more expensive and your income's not rising to keep up with that. I always say the government doesn't care about you ultimately as an individual, and the banks don't care about you. And real freedom is financial freedom. So it's up to you to take care of your financial situation. Now, every Friday, what we look at is what I would just call a basket of goods with respect to your savings and the dollar. That's why I say the dollar is dead. Is a dollar actually completely useful and dead? No, of course not. Dollar essentially is losing its value. If you look at any chart going back over the last 100 years, you'll see that the dollar has lost 99% of its value. So if you just hold dollars in your bank account, over time, they're going to buy less things. Is there anything you can do about it? Yes, I recently put out an episode just specifically talking about doing what the rich do, which is buy assets in things that will increase in price. So that's what we discuss. Not what's in your retirement accounts, not what you might put into stocks, but that savings that you're growing, you might keep some aside for paying your monthly bills or a couple months, emergency fund in case you lose your job or there's a large expense with car or air conditioning, whatever it may be. But then as your savings grows, how can you keep those dollars from becoming worth less? Not worthless, but worth less. Well, what we talk about is, yes, you may hold some dollars for your immediate expenses and emergency fund. Then there are things such as CDs and treasuries and savings accounts that pay interest. Not the best, but probably the least riskiest. Then there are things like commodities such as gold and silver, which over time have gone up significantly. And then, of course, recently, last 10 years or so, maybe even more, crypto, things like Bitcoin being heralded as another store of value. Regardless of what you think might be happening in the future to these assets, you can see that over time on any graph, they go up and to the right, meaning they keep becoming more valuable. Now, they do dip down, they do shoot up, they do dip down, but over a long period of time, they increase in value. Over a long period of time, look at any chart, the dollar decreases in value. So let's hold some of our savings in assets so that we don't lose all of that value. So take a look at this. We look at it every week. I put up here the savings, the CD, and the treasury. And once a month, I use this particular site from the government to show that the average savings rate percentage is 0.45%. That's terrible. A 3-month CD, 1.53. Why do I choose 3 months? Because if you're just rotating some cash, and maybe you get a CD every month, and you get a 3-month CD, that way you can get a little higher of a savings rate. Still not great, still below inflation. So your dollar is still losing value. Treasury 3-month. T-bill 5.46%. So it's gone up slightly since February. And I look at everything based on last February of 2024, which is when I started these episodes, even though I've been doing this for years. Now take a look at this. Gold in February was just over $2,000. Now it's $2,350. You might think that's not a big deal. Well, in just 3 months, it's gone up 17%. Imagine if the money in your bank account went up 17%. That's what we're talking about. Had you converted some of your cash into gold, you would have 17% more cash, essentially, if you were to sell it. Silver went from 22 to 30. That's $8 on 22. That's significant. We've got Bitcoin was 43,000. Now it's 67,000, a little over. Ethereum, 22.99. Now 37.01. I always look at Bitcoin and Ethereum. That's what you always see on the business channel, that sort of thing. Considered the world's gold, if you will. Bitcoin, store of value. And Ethereum, they call it the world's computer. Ethereum, of all of the different coins, altcoins, if you will, besides Bitcoin, Ethereum is probably the first mover advantage, I would call it. So I put things into those. I have more in other crypto, but those are the ones we're tracking. Now, the idea here would be a small percentage of your money, a couple months, emergency, whatever's in cash, the rest in things like gold, silver, Bitcoin, and Ethereum. And as you can see, you would be up quite a bit right now. That doesn't mean it's not going to go down over time, but we're talking about parts of your savings that you're going to hold for a while and not need in the short term. Look at inflation. Just came in at 3.4%. It's been, I believe, over 3% all year. So unless you're making 3% or more on your money, you're losing value. And then lastly, we look at the 10-year Treasury, 4.484. It gives you an idea. You can see this is a 6-month chart here of where the market thinks rates are going in the long term. And it's usually correlated to mortgage rates. When this goes up, mortgage rates go up. When this goes down, mortgage rates go down, that sort of thing. So after seeing that, the idea being a portion in cash, then buy some things like commodities. I'm going to put out some how-to videos because I've been asked on the easiest ways to buy, for example, gold or silver, whether it be physical or through an ETF. And then there's places where they will custody it for you. I'm going to put that into a video and bring that out. Also, easy ways to buy crypto and turn your cash into crypto. So over time, you become wealthier instead of getting poor. Let me give you an example. As you can see, I'm older. I'm in my 50s. If you're watching this and you're in your 20s or 30s, when I was in my 20s, gold was around $350 an ounce. $350. So in my 20s, if I had put $350 in the bank, and I put, on the other hand, I took $350 and I bought some gold, actually, oddly enough, it's $2,350. It is up over $2,000 an ounce from when I would have bought it in my 20s. So if I had held some gold then at $350, I'd have $2,350. If I had kept my cash, I would have made a nominal savings rate, plus had to pay taxes on that. On commodities like gold, silver, crypto, whatever it may be, you don't pay taxes until you sell them and you recognize a gain. Money in the bank yields interest, you pay those taxes yearly. So that $350, I'm not sure what it would be worth now, but it's going to be worth nowhere near $2,350. So as you can see, assets, that's what the rich do. That the top 1% of individuals in the nation hold a significant amount of assets, whereas the bottom 50% hold way less than even the top 1. Why is that? Because the rich know that the dollar loses value and assets go up. So thanks for watching. I hope this has been helpful. By no means am I advocating dump everything into gold or dump everything in silver. I don't know where prices are going. I don't know what the future holds. What I do is I diversify and I buy into everything over time. Thanks for watching. Hope this is helpful. Please hit that like button if it has been so other people can see it as well and help them change their mindset so that they can get control of their financial future. And subscribe if you haven't already so you can see future videos. Thanks for your support. Thanks for watching.